Good day, good evening, or good morning to everybody watching. In this video, I'll be showing you 3 indicators that can help you improve your trading strategies, or you can implement them in your daily trading, or overall, just use them day to day to have your success rate go up. I wouldn't call this an exact strategy like combining the 3 indicators to use multiple data from them, but you can do that as well. These indicators are basically very useful on their own as well, but of course with indicators as it comes, the more you use the better, because the more entry points you have from point of view of information is better always, because you can back up anything that you might be pondering upon, if to enter a trade or not, or of course how to enter a trade. Anyways, with this out of the way, let's get a brief introduction going on. As you can see, I already have my trading view set up. Well, not set up, but open. If you're actually working on this for the first time, I would recommend going on to another of our videos and checking out how to actually use trading view, because I won't be explaining the basics of what a candlestick is and how to read them, or how to properly change them, scale them up, etc. I'll be mentioning some of the stuff, but not everything in this video. So let's begin with one thing. I'm going to be using the Hikinashi candles, not the standard candles. I find them quite more appealing, first of all, and I just prefer them. So if you want to change your candles as well, just click on the top left corner where it says candles on its icon right over here. When you click them, a drop down menu will appear, and switch to Hikinashi. So now that we're swapped, I'm just gonna scale up from here. You can adjust the scale just by grabbing here on the right and scrolling down up. Of course, you can just auto everything from here, which isn't bad, but I don't really prefer having it in auto. I like using auto only as a backtrack method of getting back. So if my scale is all messed up, we'll be using the Bitcoin USD dollar, the US dollar chart, and the scaling will be using 5 minutes. So you can, it's not that it doesn't work with larger scales like a month, week, a day, 4 hours, 3 hours, 2 hours, 1 hour, or even like 5 seconds, 15 seconds, or 30 seconds. It's also pretty much to personal preference and depending on your exact strategy that you're using. So it varies, like everything, it depends on the person and the strategy that they're going to be applying. So let's use a 5-minute chart. Let's go for a bit. Let's do it like this. Okay, and this was I was talking about auto, so I can just position it and I just click it and turn it back right off. So the 3 indicators I'm going to be using is the Magdi with divergence, the relative volume indicator, and the STC indicator. I'm going to add them one by one. I'm going to give you a brief explanation to each, and pretty much how you can use them. I'm gonna test them a bit, and that's it. From there on out, I will leave the rest to you, but let's begin with the simplest one, the relative volume indicator. So how to add an indicator? It's quite simple. Just click on indicators right here and select your indicator by typing it out, of course, relative volume, and select the first one by verified. There we go. Now let me just close this window. As you can see, it can be, for a simple indicator, quite intimidating at first when you see it. So let's clear it a bit up, and we're gonna shrink it because we will need all the space we can get. So from here, select the settings, and let's leave only volume. And move entry, go, almost STD, SMA. So there we go. We just want the volume, and I'm going to shrink it like this. Okay. So the relative volume indicator, and most of you probably already know it as RVO, just simple as that, is an abbreviation. Pretty much tells traders how the current trading volume is compared to the past trading volume, of course. And as everything in trading, it's always happening in the space of time. So it's not just how it is now, it's how it's going to be progressing. It can tell you that. And of course, how it was in the past. So everything is over a given period of time. And of course, as traders, this is what we want. The higher the relative volume is, the more in play it is, because more traders are watching it. So we have more trades going on. Currencies and stocks usually that have more volume, usually have, not usually, but they do have more liquidity, and are actually better to trade with than like stuff with low relative volume. It's actually quite an overlooked indicator, mostly by new traders. But knowing what other traders are watching and trading is key to understanding what stocks are in play and which ones will likely make big moves. So it's a very good prediction tool overall. And at the end of the day, trading is just predictions, 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 predictions. Nothing is certain. You can make your predictions and you bet on it. So that's pretty much for the relative volume. So the next indicator we are going to be adding is Magdi with divergence. There it is by a few. And this is what I meant, that we're going to be having a lot of charts here today, because the third indicator is also of the same type. Actually, it's quite, people say it's an improvement to the Magdi, but I think they can benefit one from another as well. Anyway, before we get ahead of ourselves, I think most of you are already in the how with Magdi and know what exactly it is. It's a trend following momentum indicator. It shows relationships between two moving averages of the price. It's calculated by I think subtracting the exponential moving averages, the EMA. So if you want to play around, you can actually set up the different periods. If it's, you want it from a 12 or a lower or higher EMA. In the result of the calculation, so the MACD is this line that you're seeing over here. But what's special about this particular MACD is that we have an additional indicator built in it. As you can see on the chart, where we have our lowest lows, and on the MACD we have our highest lows. We have a little line that says it's a bullish pattern, a bullish run, if you want to call it like that, but not really. It's just pattern. And for the opposite, for the highest highs and the highest lows, not holes, but you got my point. We have this bearish pattern right here, and that can tell you where It's about the price to go up or down, or is it gonna maintain its overall stability or not. But let's be real, there is no real stability in trading. Most people actually like to use the relative strength index instead of Magdi usually, but RSI aims to signal whatever market is considered to be overbought or oversold in relations to recent price levels. So that's why instead of RSI, what I'm going to be using as well is another indicator, the SCT indicator. Did I say SCT? I meant STC, sorry. So go ahead and click on indicators again and type STC. And as you can see, it even says STC indicator, better Magdi. So you may be asking, what's the point of using both Magdi and this indicator? Well, pretty much as I said, like in the beginning of the video, reassurance, because you can never, and you can actually never be sure in anything when trading. So that's why I like to use, even if there's two things of the similar type, they tell a different story, they calculate things bit differently, so you can make comparisons between them. How exactly the STC works? Well, you have your scale right here, it goes from 0 to 100, and you have your oscillations right over here. When you should be looking at the 75% and the 25% line. So usually when it goes to above 75, you can pretty much expect a drop in the price, and when it goes below 25, you can expect the opposite, an increase. Everything in between is let's just say no, speculation and possibly stable, but not really. So how it works is similar to Magdi because again it's a moving average convergence slash divergence, which is just an indicator used to forecast price action pretty much. And but the main benefit of it is that it's faster than the Magdi, because usually the Magdi has a bit of lag in it. While the STC computes using the same exponential moving averages as Magdi, it adds a novel cycle component to improve accuracy and reliability. So it should be noted that although STC is developed mostly for fast currency markets, so BTC might be considered that, but well, as of late may be considered that, but usually isn't the prime example for it. But we'll try to test it out here. I do have note, by the way, that the STC, while maybe faster than MACD, it tends to linger a bit in the overbought or the oversold territory for a bit of unusual periods of time to time. Anyway, these are the indicators that we'll be using. So let's take a look at the 5-minute chart of the Bitcoin. So as you can see, we have a big decline right here, a drop, a continuous dropping trend. But let's take a look right from here. See the volume chart, see the MACD, and see the STC. The STC is below this 25% line, so we might expect an increase from right over here. The Magdi is suggesting a bullish pattern, and we can see with the volume we have something indicating the opposite of that, but we have two indicators for that. And right over here you can see how it starts to increase, but the moment it goes over 75, another drop, and right here, boom, the bullish pattern, and we have this increase, and we start seeing a bearish pattern. Not a bearish, but a bullish, I'm sorry. So right here, this, you see this big resistance right here on this candle. See how far it dropped, but buyers pushed it back in, and we have this fighting candle right over here. So from here on out, we see this good, beautiful bullish pattern developing. So right here, below the 25 on the STC, the bullish pattern on the Magdi with the divergence, the volume all green, and boom, it starts to increase. Yes, of course you're gonna have some drops, but that's normal, as you most know. And it starts riding and riding and riding. And you can see, you can catch these little waves. If you're trading on a 5-minute pattern, you go in here, boom. The moment it reaches 75 right here, you pull out, you close. Wait for it. Here, 25 again, under 25. The Magdi suggests all good. Again, you enter here, ride it up until 75. Stop around right over here. It's not about maximizing and catching the biggest win. It's about winning overall. Yes, it's real good when you maximize your profits, but having profits overall instead of losses is even better, right? I would say so. So let's have a long position right over here. So let's just first, let's apply everything that we know. Zoom in as much as possible, like this. So let's start from here. We have these upside down hammers, and we have this fighting candle right over here, and boom, we have a decrease, but all of a sudden right here again, as we can see here, with these hammer crossed or hammer shaped candles, we can pretty much assume that selling pressure is going to get into the market again. And we can see the volume, how the Magdi, and right here under 25. Okay, so if we enter right over here, oops, let's select my conventional, and let's say the moment it goes above, a bit above 75% right over here, close here, there we go, perfect. And as you can see, we would have a win, and apply these to all the patterns right here. You can see how many of them we actually could have caught with the same one, because here, entering at the 25, leaving right after the 75. It's so good. And you can do the opposite as well for drops. And that's pretty much it. This is how you can read the 3 indicators and make a very good profit. Well, I hope this video informed you at least a bit how to work with these 3 indicators, how you can apply them in your daily trades, even if you're not using the 3 of them, but one or the other. So thank you for watching, good luck, and happy trading.